Okay, everybody, here we go. It is me, Gregory Mannarino, Friday, July 28th, 2023. Lots going on as usual, but let's first start off with this. As I am doing this video blog, it is 7:57 a.m. Eastern Time. All right, with that, stock futures are higher pretty much across the board. Nothing major, but higher nonetheless. The MMRI has dropped 6 points since its high yesterday. We hit 256 at one point yesterday. Right now, the MMRI is sitting at 250, right at what has proven to be the first red line in the sand. Now, we're going to need to keep our eyes on this, especially in light of what just happened. So the Bank of Japan, who is involved in, I guess every central bank is at this point, full-on yield curve control, has admitted that they are going to be adjusting their yield curve control, and the market is trying to figure out what that actually means. Basically, what it comes down to is, something you and I already know. We have a massive, and I can't underscore that enough, problem here. The global debt market is a ticking time bomb. It's going to go off. When it goes off, who knows? Central banks are obviously involved in a coordinated effort or a scheme here to keep rates suppressed. They're buying all the debt just in an attempt to keep things afloat. At one point, again, this whole thing is just going to let go. And what is the effect of what central banks are doing? Well, it's rising global inflation. You see, these central banks, they can't explain to you that you literally cannot have your cake and eat it too. By implementing their effort to keep rates suppressed now for over a decade, it's massively inflationary, and this is why we're seeing what we're seeing right now. And again, no one's talking about it. No one will talk about it. But that's a fact here. Central banks are not magical. They have no mystical powers here. When they say they're going to do something with bond yields or yield curve control, they have to get into the market and make it happen. They can't just say it. You understand? I think this is a topic that most people have no idea about, but you do, because you follow this blog. So again, that's where we stand. MMRI has come down. The Bank of Japan is implementing a tweak. That's what they're calling it, to their yield curve control. MMRI has dropped here. Stock futures are higher. Let's see. As we discussed yesterday, action must be taken right here, right now, by the Federal Reserve to do something to keep this market propped up. They have 3 choices. 1, cause the dollar on a relative strength basis to weaken, which this morning, by some miracle, the dollar strength is lower. Number 2, they can suppress yields yet again, although they're raising rates, so that's an interesting kind of a dynamic, isn't it? 10-year yield has come down just a little bit. We were at 4% yesterday. We're 3.96 right now. Okay, that's 2. Or 3, get into the market and start buying large cap stocks. That's what the Fed does. Okay, that's how they prop up the market. You don't believe me? Look up Plunge Protection Team. It's a real thing, the Fed. New York Fed has a trading desk. They use this to keep the market propped up. So they have 3 options or a combination of those 3. Let's see what they do. I sincerely believe, and I could be wrong on this, all right? Let me just throw this out here yet again. I don't think they're done, especially because this is an election cycle. You have the Bidenstein. Do you believe what he's doing right now? I want you to think about this, and this is laughable. He's touting a manufacturing boom on his watch. He's responsible for the manufacturing boom. We have no manufacturing boom. Manufacturing and factory activity is in contraction. They've been in contraction, for at least this guy's term, pretty much, and is getting progressively worse. But you see, this is what they do. They have to convince you that even what they're telling you, because of their own data, is not real either, So of course he's out there touting a manufacturing boom, and of course this fake GDP number that we got yesterday again. Turn on Bloomberg, Fox Business, CNBC, and they're all this morning again orgasmic over this supposedly fantastic GDP number. This GDP number is not reflecting at all what's going on here. Again, government spending is a huge part here of GDP. Government spending has gone absolutely wild. This is not the consumer. Consumer spending is maxed out. As a matter of fact, it was pretty much flat. So the real reasons why we got this supposedly fantastic GDP number, which is actually lower than the rate of inflation which they're admitting to. So, I mean, how is that even good at all? Of course, it's not. Is corporate spending, because it's fulfilling the corporate agenda, as central banks raise rates here, pressuring small businesses and killing the consumer. All the stuff that you and I have spoken about like since forever now. All right? So none of this is a surprise. So that's really the story. I was writing down a few things. Now, speaking about our lovely, illustrious, I don't even want to say president here, what he won't tell you is this. Food inflation under his watch is up 56%. 56%. Also under his watch, according to their own numbers, real wages are down 3%. Obviously, it's way, way more than that. And mortgage rates under his watch are up 115%. But you see, he won't tell you that either because, it's just too easy to look this stuff up. Now, going back to the market real quick, we heard from JP Morgan, I believe it was yesterday, and they have a bearish stance on the stock market. Like I said, it's all about risk. If the Fed is able to keep risk at bay, the market's going higher. But JP Morgan reiterated their bearish stance on the stock market again. We'll see how that plays out. Crude oil, as you and I expected, is at $80 a barrel, going much, much higher. Let's look at a couple of other assets here. Cryptocurrencies this morning are catching a bid pretty much across the board. Gold and silver, after yesterday's smackdown, especially with silver, doing pretty well. As I had mentioned, the relative strength of the dollar is lower. And again, a weaker dollar, a weak dollar on a relative strength basis is very bullish for a few things. The stock market and commodities as well. Why do you think, for example, President Trump was speaking about he wanted a weaker dollar? He was talking about negative rates. All this would have been very, very good for the Federal Reserve. It didn't actually happen, but he was calling for that for quite a while. So in my opinion here, let's keep an eye on this, okay? We're going to see a few things happen. And again, this is just my opinion, and it could be wrong. We're going to see the dollar weaken substantially moving forward, along with other fiat currencies, as I discussed recently. Central banks remain in a race to the bottom to suck more purchasing power out of the currency, and inflation will continue to rise. These little token rate hikes, we got a 25 basis point hike out of the Fed Wednesday, followed by a 25 basis point by the ECB, European Central Bank. I mean, it's just a joke, all right? And it's not meant to do a damn thing here, other than, again, they're cutting off the availability of credit to small businesses and to the consumer here, while the corporate agenda is just taking off here. But no surprise to anybody who follows this blog. This is just the way it's going to go. Anyway, so with that said, that's pretty much where we stand today. I don't know about you, but I can promise you, I personally will be watching the MMRI all day. I want to see what they pull off. Again, do I believe that any government agency is following the MMRI? No, I don't believe that. We have this tool. It's ours. But obviously the Federal Reserve is watching the 10-year yield. Obviously the Federal Reserve is watching the relative strength of the dollar, the two key components of the MMRI, so they might as well be watching the MMRI. You see what I'm saying? So I'm going to be keeping my eyes on that pretty much all day. Let's see what these freaks pull off today, because I don't think they're done. I don't think they're done. I think they're going to continue to prop this up, at least through the election. Let's see what happens again, because people believe. They believe. I believe. If the stock market is high, that the economy is strong. But nothing could possibly be further away from the truth here. This gap between the market and the economy is getting wider and wider, just like as you and I have expected for literally years. All right, people, that's it. I will see all of you later for my live stream, 4:05 p.m. Eastern Time. If you do subscribe to my free newsletter, most of you know I went drag racing yesterday. I posted a nice picture of me coming off the line yesterday in my 69 Camaro. Go take a look at that. I get the wheels off the ground by about at least a foot, I think, in that picture. Anyway, all right, I'll see all of you later, and I'm looking forward to it.